Welcome to this presentation from the Fortis knowledge base. In this presentation, we're going to do a direct comparison between monthly RTI verifications and using the Fortis system in relation to the potential joint and several liabilities. We'll be looking at a 2-monthly cycle. It's important to highlight that in these examples, we've assumed that the PAY liability has been calculated correctly. You should be aware that if there are wrong payroll calculations or wrongly paid tax-free expenses or the application of wrong tax codings, these could all result in additional liabilities, but these could be managed and controlled when using Fortis. It's also important to recognise that under joint and several liability, the significant liability sits with the payment of the main PAY amount due, and in many cases, small errors in payroll calculations are insignificant and can easily be handled through normal business expenditure and do not pose any threat or risk of significant additional costs severely impacting business cash flows or reserves. In relation to Fortis rolling liabilities, it's assumed that the agency or relevant party is making the payment due on PAYE directly to HMRC. The way that the PAY system operates is on a weekly basis with the submission of an RTI return and the payment of the worker. This triggers a PAY liability, although this is not due until the 22nd of the month following. Understanding this cycle is a key aspect of being able to determine any potential liabilities under the new joint and several liability rules. We'll work through an example and use workers who are paid weekly with the reported PAY liabilities on each week running at £20,000. We can see on this slide that after each weekly pay run, the potential liabilities for the monthly RTI verifications are growing, as these PAY liabilities are not due until the 22nd of the following month. Fortis liabilities are settled and so continue to run at zero. Now we're going into the second of the monthly cycles. We roll the weeks up to 7. This is an important week for those that are using monthly RTI verifications. This is the week that payment is due for the PAY liabilities incurred during month 1. So on the 22nd of May, this payment should be received by HMRC. You will note at this point the monthly RTI verifications have a potential joint and several liability risk of £140,000, whereas Fortis, as this has been settled as we've gone along, is still running at zero risk. This slide shows that whilst the PA was due on the 22nd of May, this is unlikely to be verified on the HMRC portal, as this typically takes 7 to 10 days before the payment would be updated and reflected through the portal. This results in a further week of delays, meaning that the RTI verifications now have a potential joint and several liability risk of £160,000. If we assume at this point that the HMRC portal has been updated and there have been no delays or wrong allocations of money, which is not uncommon. Understanding how monthly verifications deal with these exceptional situations is a key question, as for each week they're unable to verify the payment, those relying on the monthly RTI verifications will have their potential liability increasing by £20,000 per week. So we now look at the potential outcomes of the monthly verification on RTI, and there are only 2 possible outcomes. The first, a confirmation that the month 1 PAY liability has been settled in full, resulting in a drop of the overall potential joint and several liability to £80,000. Or, what no one wants, a confirmation that the payment cannot be verified or confirmed, which is likely to result in a potential liability of around £160,000, and this is once again assuming there are no delays in carrying out the verification process. We're also assuming at this point that if month 1 has not been settled, it's unlikely that any liabilities accrued during month 2 would also be unsettled, hence moving the rolling liability to £160,000. Assuming the PAY liability for month 1 was verified as paid and week 8, we can see that the rolling liability on monthly verifications dropped to £80,000, but by the end of the month 2 cycle it moved back up to £100,000. Once again, as the PAY liability is paid as it arises under Fortis, Fortis continues to have zero risk under joint and several liability. Thank you for taking the time to watch the video. You'll find other knowledge-based videos explaining other key aspects as a result of the changing legislation, so feel free to browse. You can reach out to us using the email address on screen, and we're more than happy to organise individual consultations to explain how the Fortis system can remove the risk of joint and several liability and put you entirely in control of your supply chain compliance. Thank you.